Thank you, first of all, for joining us. We want to thank you for attending our eighth annual Tackle Your Financial Future webinar. This event is designed to really help give a high-level introduction to some basic financial planning tools and opportunities. For many of us, this season is really between the holidays and looking forward to filing taxes and second Christmas. And so we look forward to maybe catching up on bills, maybe buying ourselves a luxury item or two, and then going back to managing our lives where a lot of times we're living with more month than we have money. And so our goal here at Mon Valley Initiative is not just to help people get back to work. Our goal is to help people build towards financial stability. And really that means the work is part of the equation. We have to have tools, we have to have plans, and we want folks to work with us to be able to use the information in this webinar to begin to implement a plan and a purpose with your finances. How many of us have bills already waiting on us before we even get Friday's paycheck, right? And the simple fact is that information is power. And so we want to begin this day and this year of financial empowerment with you. And so we have a panel today of different presenters and experts in the field that are going to talk about a variety of topics that are germane to just that, getting and maintaining financial stability. And right off the top, we're going to turn it over to our guests from Citizens Bank, Tammy Bay and Terry Thompson. In this age of digital pay apps and other like quick cashing stands and otherwise, a lot of people have moved away from kind of traditional sort of banking services and such. And so we really want to start with that as a means to moving forward towards stability. So with that, we're going to turn it over to Citizens Bank. So Tammy and Terry, thank you so much for joining us today. We appreciate it.
Sure. Hi, everyone. My name's Tammy Spencer Bay. I'm the Community Development Officer for Citizens. And just want to thank you all for having us and looking forward to Terry with the presentation. We're going to talk about banking at the speed of life and what does that look like for us as we are in this digital age. So I think a lot of it will be you'll be able to relate to, and we'll be able to make this interactive too. So please ask questions. We're not going to wait until the end. This is going to be a very interactive session. But I will let Terry introduce himself. He is the um, branch manager at the Swissville location. So if he is on, I think he was having trouble with his headset, but um, I'll let him take a moment to introduce himself.
So you might have to step away for a minute. And you're muted.
Did. Am I able to share the screen?
Yes, yeah, you should have the option right there.
Okay. All right. Can everyone see my screen?
Yep.
All right. Perfect. All right. So banking at the speed of life, what do you think that means? Banking at the speed of life. Oh, Terry, you're back. Can you hear us? I don't think you can hear. Okay. We understand that more and more banks are providing consumers, with digital financial institutions, I should say, are providing consumers with digital experiences. And so we just want to help you today to better understand the options that you have when using technology with banking. What does that look like? And our goal is just to kind of review and make sure that you are able to have all the resources that you need moving forward. So, and how to protect yourself as well. So, the banking at the speed of life, the use of technology is transforming. It is moving in ways that consumers are able to manage their finances and connect with financial institutions. A lot of financial institutions, have have gone digital. Almost everything has gone digital. You can direct deposit with digital. You can online bank and bill pay with digital. Mobile banking, you can send requests and receive money. With Zelle, I know that there's a lot of other applications out there like Cash App or um, there's Cash App, there's another one, I can't think of it, but um, we know that those are out there, but Zelle is through the financial institution and actually has a lot more security mechanisms than some of the other platforms. Um, Also, financial institutions also have a lot of apps to manage your finances. You can look to see what you're spending to help you control your finances, to help you kind of see where you are, what you're spending on, and help you to come create a plan within your digital experience. And also, there's a lot of AI and online resources to help you with your banking experience as well. So, how many people? Right now use or have some type of banking relationship and use the digital apps.
Good
Can I just like
question.
show of hands
Yeah, go for it.
or anyone? Okay, I see a couple. I see a couple. Okay, good, 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 good. How many of you use direct deposit? Okay, I see one. Okay, just one so far. I just see one. With the two, I see two. Okay, three. Me, I'm three. All right. Direct deposit is a very fast and convenient way to get your paycheck. It's easy. It goes directly into your checking account. Businesses and government agencies use direct deposit to transfer funds into your account on payday. Financial institutions like Citizens and some other financial institutions have um, 2 day or they have uh, pay early. And so sometimes you are able to get your direct deposit 2 days before the, you know, paycheck date. So say you're getting paid on Friday, there's financial institutions like Citizens and some other ones that pay you 2 days before the actual payday. So you're actually getting your pay early, and we call that pay early. Benefits of using direct deposit. You save time. You don't have to wait in line for a bank. You're not going in and cashing that paper check. You save money. There's no fees for the service. There's no fees to direct deposit into your account. Um, there's no fee. You can, it's no risk of losing a check or getting a check sent in the mail or putting it in your pocket or your wallet or something like that. And it gives you a peace of mind. You know that your funds are available immediately. So it's really nice to have that opportunity to just be able to say, wake up, at 6 a.m., and then your paycheck is right there with you. So it's nice to have that. Terry, are you back with us?
I am back. Can you hear me?
Yes, I can hear you.
Perfect. Okay. Sorry about that, everybody. Life happens sometimes, and this is one of those moments, especially being in branch. So thank you, Tammy, for filling in while I got my technical difficulties taken care of. Um,
Absolutely. I was just going over direct deposit. So since you're a branch manager, I'll let you introduce yourself and then you can kind of go into a little bit more detail about the direct deposit experience.
Absolutely. So, my name is Terrence Thompson. Everybody calls me Terry. Terrence is way too formal. I've been a branch manager at Citizens for about 4 years now. I've been in banking and some type of finance for about 11 and a half, 12 years. Prior to me being in branch, I actually worked at, one of the local check cashers. And then I, got into a more traditional banking setting. So, I've worked across the spectrum, all walks of life. So, I want this to, be as interactive as possible. So if you all have questions, put them in chat, jot them down. I'll make sure you all have my contact information in case there are questions after the fact. But that's a little bit about me. So outside of the direct deposit, that is definitely helpful. I know everybody wants, money in their pocket or in their account as soon as possible. So, getting paid up to 2 days early once a direct deposit is set up is definitely a huge advantage. I know there are some mobile or fintech uh, companies that offer that as well. And I know that's, a reason. I think there's, your chimes and different things like that that offer, the paid early. So, we're trying to be mindful of that and make sure that those options are available for our customers as well, because we know how important that is to you. Another big part of that is, a majority of the banking now is done digitally. I tell folks all the time, if I didn't work at a bank, I would have very little reason to come into a bank. So unless you just have to do something with cash or something that can't be done electronically, online and mobile banking is huge. Nice thing is checks are becoming a lost art form. People knowing how to write checks, how to sign checks, how to use checks. So with online banking, not only does that give you direct line of sight to how your funds are set up and how things are, coming into and leaving your account, but if you need to pay someone, it might be Johnny Snowblower down the street that's 2 doors down. You might not have cash on you. You might not feel comfortable doing Zelle or Cash App. But in those instances, you can set up a bill pay for the neighbor that's 2 doors down the shovel their driveway. And that will send a check from your account to your neighbor that's 2 doors down at no additional charge. You're not paying for postage, not paying for the envelope, not paying for anything. It'll even give you the estimated date of arrival. So, that's if you don't have checks. The other part is if you don't, want to go pay the bill in person, you can set up your bill pay. So if it's something like your utilities, Duquesne Lights, PWSAs, People's Natural Gas, you name it, it will also pay directly from your account to those merchants. And a lot of times those will happen next day. And again, it'll give you the estimated date of arrival. It doesn't have to be automatic, so you still control what goes into and comes out of your account. If you want to set it up as recurring, you can. So all of those, we try to, again, make your banking as easy as possible for you. Now, I know one of the things that we initially touched on, talking about the other, some of the other fintechs, is being able to send and receive money. So 99.9% of all banks in the United States utilize Zelle. And that is a much more secure way to make sure that your money goes from your account or comes from somebody else's account into yours. You don't have to give out any of your personal information. You're going to register your Zelle account with either a phone number, preferably a cell phone, or an email address. And someone is either going to send you money to said phone number or email address. Money is going to be deposited directly into your account. You don't have to pay any transaction fees. You don't have to wait to 3 days. You don't have to do any of that. You register, they can send money within 30 seconds. Money goes into your account. You keep going on about your day. So if it's a matter you splitting a bill after lunch, you owed somebody money because you lost in fantasy football, whatever the case is, you send them the Zelle and the money goes, directly into their account or into your account. So those are the types of things, that we, again, try to make available to you. Now, there are a number of, different apps that you can download that you can use. The one thing that I will always, and it cannot stress enough, make sure you fully understand either where your money is going to or where your money is coming from. If it sounds too good to be true, there's a very strong possibility it is. So, if you cannot set it up directly through your bank, ask yourself if there are other ways that you can actually have this transaction go through, so that way you minimize opening yourself up for additional risk. Now I can't see is there anything in chat right now? Anybody ask any questions before we move on to the
No questions? Okay,
Okay,
we'll keep moving.
not a problem. So one of the things that, I, um, can't stress enough is as you are looking to make sure that, your financial life is doing what it's supposed to do. One, I've moved on to apps to manage finance. The second bullet point is savings. Okay. In my opinion, savings should be first. Okay. Um, Biggest reason I say that, you should always want to pay yourself first. I know we all get paid on payday, or, might be, different times whenever money comes into our accounts. Okay. Um, we want to be able to set ourselves up to have a cushion. Now, your cushion could look different from my cushion. Your cushion could be $5. It could be $20. It could be 50 cents. Whatever you deem suitable. And I always explain it this way. Anything that you may not miss. So if you pulled your phone out your pocket and a $20 bill fell, would that be a bummer? Absolutely. But would it ruin the rest of your week? Probably not. And whatever that number is to you, that's what I would want you to put into a savings account on a regular basis. So every time you got paid, if it was $5, that's what you would put into the savings account. If it's 10, if it's 20, whatever number is comfortable, that's how you would pay yourself first. Okay. Once you have that good habit set up, then you can start to create a more aligned budget for what it is that you want it to do. So I know as we sit in frigid temperatures, creating a budget for a vacation is probably going to be top of everybody's list, and hopefully that's somewhere warm. But as you start to set those things aside, those things in the budget, start to come into view as well. So once you have that goal, you're now a lot more determined. I'll be the last person to say that you buying a latte from Starbucks or you treating yourself to lunch, that is not going to ruin your year. Okay. Despite what everybody else might say. Okay. You work hard. Please enjoy your hot coffees and teas. Treat yourself to Panera every now and then, not every day, but every now and then. That is not going to exactly. That's not going to ruin your year. So, if that is what is going to help us get through, then by all means, I will encourage you to do so. But put yourself first, put your savings first, pay yourself first, and then rent's going to get paid, gas is going to get put in the car, groceries are going to get purchased. But as long as you are putting those extra dollars aside, you'll look up in 6 months and realize, hey, I didn't realize that I was able to get, an extra, $250 simply by, paying yourself first. So I did see something pop up. What was that?
So Charles just said, put any questions in the chat. So
Ah,
just wanted to make sure that we weren't missing anything. What
Gotcha.
slide are you on, Terry?
There's a question here. It says you
Oh,
mentioned some good reasons for online and digital banking, but what are some good reasons for having a personal relationship with a bank branch?
Absolutely. That's an amazing question. And thank you for asking. So, one of the things that I can say in having a personal relationship is the bankers and the tellers get to know you. They get to know your account habits. There is a lot of, fraud that is going around right now. And I wish I could say it was just in Pittsburgh. I wish I could say it was just in Pennsylvania. It is a global epidemic right now. And we're talking a multi-billion-dollar a year industry that these fraudsters are perpetrating. So having a personal branch, one, there's going to be a time, at least I'm hoping, where you are going to need, one, to either have somewhere safe to deposit funds and make sure they are safe. So having let's say a bank that is not purely digital. Okay, you run into FDIC allowances. So if something does happen, your money is still insured federally. Okay. Another thing, having a personal branch as opposed to being purely digital. If something goes wrong, okay, with a Cash App card or the system goes down or whatever the case is, your funds are now, for lack of a better term, trapped based in on this card where you can't walk in, you can't make a phone call. Everybody else is doing the same thing at the same time, so you're now hour and a half, 2 hours in, just trying to get access to the money that is yours. The other part is you have multiple locations where people can learn who you are and how you do your banking. If I know some of the pain points, and I will be 1000% honest, is a lot of times someone will make a deposit of a check and there may be an extended hold placed on a check. A lot of times that is due to, one, protect you, the customer, but also to protect the bank as well. So if there are deposits that need to be made outside of cash or electronic, outside of, the basic, let me just pay for everyday, things, having a bank somewhere safe to place your money where your money can actually grow and earn interest. If you ever want to purchase a home, having access to better interest rates when you go to apply for your mortgage. There are various ways with having a home-based bank. Now, again, as a branch manager, like, I will be the first to say, you don't have to have one bank. I have three. Okay. So I'm not saying to completely abandon ways in which you feel comfortable, but having somewhere, something brick and mortar that is going to be your fail safe. If the card isn't working, can you walk in and still withdraw cash? Do you have those options available to you outside of a non brick and mortar location? Did that answer your question, or did I leave anything out?
And I'll say this too, it's really nice because I had misplaced my bank card, and I walked right into the bank and they were able to give me another one right on site. So it was really nice. I created a new PIN and was able to get one, right there in my day. It only took 30 minutes or so for me to go to the bank, get a new card, and off I went. So it's nice to kind of have that relationship. They also understand, your banking needs and what you need. And if they see something a little off, they're able to spot that too. So it's really nice to just kind of come in, establish that relationship with your bankers, your tellers, your bankers, and other resources available at the bank too.
So one thing that are there reasons that you may not want a bank? I think that might be an easier question as well. What are some of perfect? Um, so so the question came through, reasons why people might not trust the bank. And there have been a lot of instances historically that have caused people not to trust the bank. The whole reason the FDIC was put in place, or insuring funds, was because there was a point in time when banks had specific branches. When you went to that one community bank, and that's where everybody in the community kept their money. Um, when there was a run on the bank or everybody wanted their money at the same time, banks didn't have enough money to pay everybody the money they wanted. You may have just seen it recently with Silicon Valley Bank. That's technically what happened when the FDIC stepped in. So, banks have not always had the best reputation, specifically and primarily in communities of color, simply because they would literally turn around, close overnight, and everybody's money would be gone. So that in and of itself, which that actually happened with the U.S. Freedmen's Bank, money was just gone overnight. So you figure if this happened in the late 1920s, okay, my great grandma, who just passed away at 108 years old, she was alive when this happened. She was born in 1912. So this was in her lifetime. So if this happens to her and she tells her kids, don't trust the bank because they take your money, and her grandkids, now my grandparents, okay, who are still alive, are telling their kids, don't trust the bank because they take their money. We can now start to build some of those generational, I can't even call them myths, because in this instance, it was true. So I say all of that to say, banks are here to help. Are they for profit? Absolutely. What business is not? If it says not for profit, okay, they're not there to make money. Banks are businesses, they are here to make money. However, there are safeguards that are now in place, one, to make sure that you are, one, not losing any money. If you can't walk into a branch and say, how can I make more money? Okay, then I want you to reevaluate that relationship with your bank. But not only that, there are also a number of ways with which you can avoid paying or being nickel and dimed. The federal regulation E, I'm sorry, D, will prevent you from being able to overdraft your account. That is something that you can opt out of. So if you don't want to pay an overdraft fee, you can say, opt me out. So if you swipe your debit card, or if there's a check that comes through, or you go to the ATM and the money's not there, whether you know it or not, you can say, hey, I don't want that transaction to go through. The other part is, now, I say that for point of sale transactions. So if you swipe your debit card, money's not there, you can say, hey, I don't want that transaction to go through. Now, the other way that you can also set that up, if you have anything set up to come out of your account automatically, Netflix, iTunes, gym memberships, car insurance, Amazon Prime, Google Play, those are what's called pre-authorized transactions. So as we are being responsible with, how we are spending our money, whenever you sign up for one of those new services and there's 16 pages of text and nobody ever reads, you just click accept so you can check out Amazon Prime faster. That is exactly what you are accepting. When they deem their services have been rendered and you have input payment information, they can extract payment when they deem those services have been rendered. So as we are learning and being more responsible about banks are just going to take my money once it's deposited, you have 1000% control over what monies are being taken simply by saying yes and no to some of the permissions that we are giving. Okay. Being able to log in, going back to online banking, opting in for electronic statements. For every month, the branch sends you a statement in the mail. Most banks charge a paper statement fee. Okay. So just by you having electronic access to your account, you probably don't even open the piece of mail when it comes to you. So you're paying $3 for a piece of mail that you may or may not open. So little things like that. And regardless of who your banking relationship is, as you open that account, or if you already have the account, I dare you to ask them, how can I save money by banking with you? And if they can't tell you, then we need to reevaluate what that situation, what that bank looks like.
Terry, can we talk a little bit about the other feature that online banking has, which are the alerts, the account alerts, the bill pay reminders, and the security alerts as well?
Absolutely. So again, I am a huge advocate of making sure that everyone knows how their money is working, where it's going, where it's coming from. So with the alerts that Tammy was talking about, you can set the threshold. You can be alerted if, whether it be $50 or 50 cents. Anytime that there is a transaction that comes out of the account at the threshold that you set, you can get a text message and or an email, if not both. I have mine set up that whenever my mortgage payment comes out, I get that alert. But I also know that if I have a low balance alert, so if it goes under $100 in my gas account, because that's the only account I use to, put gas in the car, I know that, okay, before I go fill up, I need to, transfer some money over. And trust me, it will alert you every day that balance is below the threshold that you set. It will also alert you every day that it's above the threshold that you set. So you can set that up directly through your online and mobile banking. You can set that to, so that it's if there is a goal, if you want to be notified every time a direct deposit comes in, if you want to be notified every time that, Duquesne Light comes out. Those are the types of alerts, that you can set, and you can change over time as well. So if you want to set it more closer to Christmas, or lesser as you get closer to vacation, so you're spending less money, you can do it that way as well.
And I think it's important to note security alerts too. Um, that also allows you to get alerts like if there's any suspicious changes to your information or credentials. So if someone is trying to change your PIN, or someone goes in and tries to access your account and you set up your security alert, it'll also alert you like, did you change your PIN? And if not, call this number. Or someone's changed the address or whatever the case may be. You can also, and that also helps you to understand what is going on with your account, and then calling the bank right away to make sure that those things are not, it's not being fraud.
So, and speaking of that, I caution everyone to be wary of links that come through in text messages. So if there is a question, please reach out to your local branch. The number that's on the back of your card, and that also goes to having a personal relationship. Because if you know that we can take a look at the account and see that you might get an Uber here and there, you might stop at Sheets for an MTO, and your Netflix is coming out. Yes, it might be suspicious that there's a $900 transaction originating in Arizona and you're nowhere near Arizona. So those are the types of things, that tie into one having a personal relationship with a bank, but also, making sure that they understand what those banking habits are as well.
So we'll just move right on to mobile banking, just available. Mobile banking is quick, it's easy, it's fast. It helps you to manage your accounts and direct deposit. Usually you can use it for your iPhones, your iPads, and your Androids and your tablets. Um, Anything you want to expand on that, Terry?
Um, the fact that you literally have your bank in your pocket, you can control your debit card. So if you do misplace your debit card, or you drop your wallet, in the middle of the night in the snow and somebody finds before you do, you can log right onto your mobile app and put a block on the card. That way you don't have to, be super worried about, okay, somebody's going to try to spend my money before I do. You can, put that block on the card. If you find it within 30 days, take the block off the card and, keep going business as usual. But the fact that you have 99% of whatever you would come into the branch to do available in the palm of your hand, is trying to give you as much control as possible over your funds and your finances.
Yep, exactly. I know you touched on Zelle a little bit, Terry. You want to just go into Zelle and talk about the, just again to reiterate about the safety net of Zelle compared to some of the other apps.
Absolutely. So one, because a majority of the banks utilize Zelle, you don't have to, one, allow third-party access to your accounts or to your funds, because you're doing everything directly through your account or from your account. So that's one thing. A time saving and a cost savings. Typically, when you are using a third-party debit card where cash is, being transacted that way, they will try to nickel and dime you, or you're paying for the convenience of gaining access to those funds. Zelle does not give you, or does not fee you to death simply for you trying to receive money or transfer money. Um, the security, the fact that it is able to go to, like I said, a majority of the domestic banks in the United States, simply by you sharing phone number or an email address, a lot of which is already public information. You do not have to, worry about your account information now being in the hands of the wrong person, or, being out there more than you might like it to be, simply because you're only registering with a phone number or an email address. So there also lies an additional layer of security, just because you are not knowingly compromising or unknowingly compromising any of your personal banking information.
Yep. And to continue on with apps to manage finances, you talked a little bit about the budgeting tool within
Mhm.
the apps, savings as well. But you want to talk a little bit about the credit monitoring that uh, that is available with our app too as well.
Absolutely. So, couple things for happen. So there is not a bank account that, at least that I know of, at least it's offered by Citizens or a majority of other banks. Bank accounts do not talk to credit bureaus. So by you paying your bills on time, that does not improve or diminish your credit score. When that comes into play is if there is a charge off, or if there is if you owe the bank money for an extended period of time. That's when we will talk to the credit department. But so that's one thing I did want to point out, because while I have a bank account, that's going to help my credit. Those two things do not talk. However, with the credit monitoring, once you are a bank customer, there's base information that your social security number will give the bank, simply because you have a relationship with them. And in that, what that will do is give the bank sometimes offers that will let you know, one, if you are pre-qualified, pre-approved for either credit cards, different lending options, helping you. It will give you a ballpark credit score. So that way, as you are repeating the right behaviors and working to improve, your credit score, paying down debt, different things like that, it will also, help you monitor, kind of give you a brief snapshot of where you are. Now, that is not going to replace you knowing what's on your credit report, but it will allow for some baseline credit reporting, so you kind of have an idea. Okay, this is kind of where I need to be, or where I kind of need to move away from.
Nope. Are there any questions? We're almost done here. All right. Other resources for managing your finances. A lot of portals and online banking applications have learning portal. We call it learning portal, but there's also opportunities for saving and budgeting, managing debt. You can get information on college and what does that look like. Our College Bound program is on our app. You can go into home ownership, retirement, and wealth management in small business. Terry, you want to touch on any of those topics?
Sure. Yeah. Especially when it comes to college, I think we talked about saving and budgeting, talked about a little bit about managing debt. Help building a savings, will definitely help with that. So that way, it's not always everything is going directly to bills, or shoveling out of that hole. Putting something aside as well. Citizens is actually in the top 5 in the nation when it comes to student lending. So, if you have someone that is looking for, post-secondary education, if you're looking for post-secondary education, student lending is something the Citizens is huge on. Refinancing college loans is, something that we are able to assist with. Again, Citizens in the top 5 when it comes to student loan refinancing. Home ownership. We have a number of programs that are available to everyone. There are first-time homeowner options. There are, VA options, USDA options. You name it. If you want to build, you can do it that way. I see a question that just came through. The Citizens offer personal loans. At this moment, unfortunately, Citizens has suspended personal loan options. And it's simply because the interest rates that are typically associated with personal loans, meaning there is no collateral, nothing to secure the loan, were not advantageous to the customers. So as of right now, Citizens has currently suspended personal loan options. Now, that does not mean that there are not additional options available, but just not through personal lending. Meaning it would just be a super high interest rate, and you would get a certain amount of money to pay back over a certain period of time. Um, the other part of that, I'm sure at some point everyone is going to want the ability to retire and not have to work until their last day. So setting up some type of retirement account. And again, that is going to look different for everybody, but having that retirement conversation is available to all of our customers. So whether it be a virtual or and when I say virtual, just like a Zoom call like this with a financial advisor, or scheduling a meeting and sitting down and having that face-to-face conversation with someone. Those options are available to everybody that walks through our doors at Citizens. And it's like I said, it's just a matter of you having something in mind or something in black and white so you can breadcrumb your way to retirement, setting something aside and being able to know that you are retiring on pace. Or if that means that, okay, let me put a little more aside so that you can retire on pace, that's available to you as well.
And
All
then she
right.
has to follow up there, Terry. She said, preparing to start a small business, does Citizen have have business loans and or a list of foundations that offer small business grants?
Understood. So when it comes to business lending, because I don't want to say small business because if it's your business, it's as big as everything needs to be. So when it comes to business lending, it is, we typically look for at least 6 months of income. Once we have 6 months of income, then we can at least kind of see what the lending capabilities are. Because when it comes to any lending, okay, whether it be business lending, personal lending, there is what's called ATR, or ability to repay. So most banks, most lenders are going to want to know that if this loan, line of credit, what have you, is fully extended, that you have the ability to repay it back. So at least 6 months in business with 6 months of income is typically what the bank will, or most lenders will look for when it comes to, some type of business lending, loans, lines of credit, credit cards, different things like that. But those options are available.
Yes, and we also have a list of organizations that also help with small business lending as well. So if you're ever at the branch and we're not able to help you, we will refer you to those organizations that will. Are there any other questions? I think that's our last slide.
There was one more. What savings bonds do you suggest, and how does a savings bond, and how much? Okay. So savings bonds right now, but believe it or not, that would also be a good question to talk to a financial advisor about. But savings bonds, it are going to actually be done directly through the U.S. Treasury, through their website. I know there are still some banks that will transact savings bonds in branch. Citizens, unfortunately, is not one of them. But you want to see what both your long-term and short-term goals look like prior to purchasing those savings bonds, because some of them don't mature for 20 years. Some of them may mature a little faster. I am not well versed in savings bonds simply because that's not something I deal with on a regular basis. So I don't want to lead you down the wrong path. But I would encourage to see what your both short-term and long-term goals are before putting money into the savings bond, just to make sure you are getting the return on that investment that you're looking for.
All right. And then I see Sister Tamisha Anderson said, do you only offer organizations that offer loans, or do you have a list of organizations and foundations with grants too as well? So we do have a list of those organizations that also have grant opportunities as well. So we are in partnership with some of those. And so we can get that as you're coming in and talking to our business banking team. If we are unable to help you first, then we will refer you to those organizations.
Well, thank you both so much.
You're welcome.
Let's sort of end with this, and then how can folks get in touch with you if they have follow-up questions or want to continue the conversation?
So yeah, like I said, my name is Terrence Thompson. I am the branch manager here at the Swissvale location, 1918 McCaig Street, right here in Swissvale, around the corner from Edgewood Town Center. If I can, Dr. Howell, if I sent you like my list of my contact information, would you be able to get that to everybody?
Absolutely.
Perfect. Okay, I will do that instead of everybody, trying to write everything down in the heat of the moment and do it that way. But if you do need me, have additional questions, need to follow up, please shoot me an email, stop in, give me a call. I'll be happy to help you out.
All right, sounds good. Thank you both so much for your time today, Terry
Thank
and
you,
Tammy.
everyone.
Greatly
Thank
See you
you.
later.
And then with that, we're going to transition to the next part of our discussion today. We know that many employers don't offer retirement packages like they used to. There's no longer pensions. A lot of folks are going to depend on Social Security to get by when they retire. So it becomes important, no matter where you are in your life, to have and maintain both short and long-term savings. We can always do more when we are using our own, can't we? But with that in mind, we want to start thinking about planning, both for the short-term budgeting and long-term, like moving towards what our goals are. Because when you have a plan for your money, you're able to assert control over your money instead of your bills having control over your money. And so with that, for the next part of our discussion today around budgeting and financial planning, we're pleased to welcome back our friends from Dollar Bank. And we'll turn over the next portion to Ms. Joan Schmidt and Andrea Vasquez. Thank you so much for joining us today. We appreciate y'all being back.
Well, Joan, you're still muted. Thank you for having us. And not to be confusing whatsoever, because our friends at Citizens are sharing a lot of similar information, just as a lot of the banks have a tendency to do. But they all are very, very different, actually, at the same rate. So the good news is, as we all continue to do our work throughout the community and sharing this very necessary information when it comes to just finances in general, I think that it's really helpful to kind of gain as much information as you can. And kind of looking at some of those questions toward the end, there's a pretty large plethora of curiosities that we have as it pertains to finance. So Citizens is doing great work out there. They have different programs than us. They don't have personal loans. We do. I just actually found that out. And it's just kind of great to get out there and make sure, even though everyone's in competition, it's really not, because we're all saying the same message. So that's been really great to kind of see over the years. I'm going to try to stay on time. I think we have a half hour. So Charles, thanks again for having us back. As he said, my name is Andrea Vasquez. I'm the group banking manager for the bank. And Joan Schmidt is also on the call. She's our assistant vice president for the group banking department. We both cover all 52 branches here in the Pittsburgh area. And one of the biggest things that we are very different than like a Citizens, a PNC, and FNB is we are still what they call a mutually financial institution. So we do not invest in the stock market. So no one, at the bank for all these years since 1855 has their Series 6. So in order to talk about some of those long-term investments that Charles was just referring to. However, 2 Januaries ago at this point, Dollar Bank took over Standard Bank. So now under the Dollar Bank umbrella, we have a wealth management department that can talk to you about some of those longer term investment options that you might have. So I am going to share my screen. Share this screen, large screen, and just let me know if you can see it. Or can you see this financial wellness program flyer? No?
No, no.
Oh dear. All right, let me try this again. I think I should have the ability to share it. It says share screen, allow to share screen. All right, share this screen. And how about now? Good? All right. Perfect. So again, very similar, and not to be confusing, but every single bank has something different to offer. We at Dollar Bank, like I said, we're mutual. We're much smaller in size, if you will. We have 52 branches here in the Pittsburgh area, 28 in Cleveland, 13 in Virginia Beach, and 2 in Maryland. We are still very much a community bank. So some of the bigger cores of what we talk about overall are your credit score, how to improve it. We also will give you the resources in order to do that. We work a lot, again, very similar to Citizens, with some of the nonprofits in the area that can help you understand what goes into your credit score, what's on your credit report, how you can improve it. To Charles' point, with this financial wellness planning, it's never too early to start. It's never too early to think about your future. Start slow and kind of let it all build. We have a wonderful first-time homebuyers program. Again, there's a lot of programs out there. It's worth it just asking the questions, finding out, what does she mean by free money? What does that look like? How can I get my hands on it? And then identity theft, kind of self-explanatory. The people who are trying to rip us off keep getting smarter, so we keep trying to find ways to prevent that, obviously. Insurance, that's a not talked about subject a lot. If you're going to keep making the same amount of money and you're going to keep having the same bills, then one thing's got to change. Either you need another job, or you need to make more money, or you need to lower the amount of bills that you have. And, you know, we just brought up personal loans. I used the one example of my girlfriend. She had $30,000 in credit card debt. We consolidated those with a personal loan and got her down to less than a third of the interest rate than what she was paying, and she's already paid them off. In addition, she looked into lowering her insurance costs. So on a monthly basis, now she has hundreds more dollars to work with that she can even consider putting toward some of these longer term financial wellness planning, retirement planning, and IRAs and things like that. So it's always worth it to have these discussions. And again, that all ties together with managing debt. These are kind of the core of some of the topics that Joan and I teach throughout the Pittsburgh market. So the subject matter that we wanted to discuss today is budgeting, because again, it does all tie together. So with budgeting, I've kind of mentioned a few of these things. I'm going to pass it off to Joan, and we're going to try to get through this portion of the presentation. And I think some of you have been sharing questions as you go. Charles, if you see any questions, if you wouldn't mind, I'll go through the presentation, and just feel free to interrupt us and we can answer them as we go.
Okay, like Andrea said, thanks again, Charles, for having us. This is a great opportunity, and we thoroughly enjoy doing these types of things with the community. We were founded in 1855 as an independent community bank that is mutual. So as Andrea mentioned, we don't trade on the stock market. We consider all of our customers our stockholders. This gives us the ability to keep more of our money in-house and provide special opportunities and programming for our customers. We have been around for 165 years. We just celebrated our birthday, which is great. We actually still have a branch. The original branch still sits down on Forbes Avenue in downtown Pittsburgh, which used to be considered part of the financial district. And it's somewhat of a museum these days. If you're ever around and want to go in and get a little tour, a lot of the folks that work in the branch are very familiar with everything that is in there. We were founded on the concept that we believe that everyone should have the opportunity to bank for as little as $1. Hence our name, Dollar Bank. But in addition to that, then this is what we do is we still to this day work in the community to go out, talk about these subjects to anyone that we can partner with to get in, provide free financial literacy programming, and also the opportunity to open accounts right on site. Some of the things that go along with that as part of this programming is the objectives we're going to talk about today is we're going to talk about budgeting. Why is it important? Savings. How do we incorporate savings into that budgeting program? So provide some tips and hopefully a little bit of wisdom for you. Savings we compare to a daily and weekly routine. Let's say, for instance, compared to losing weight. So you decide that you want to lose weight. The first thing you do is set a goal. How are you going to meet that goal? What are the steps to get there? And you want to set a goal that is attainable because you don't want to set yourself up for failure. These goals that you set are 100% in control. They're low risk. Something is always better than nothing. So these are your decisions that you're going to make to determine what savings is going to be to you. Because basically you need money for now, money for later, and money for emergencies. So the emergency fund, what do you need that for? Car repairs, unpaid medical bills, home repairs, job loss. One of the big things during the pandemic that happened were there were a lot of folks that did unfortunately experience job loss and weren't prepared for it. So you want to create an emergency fund so that should that happen to you or any of these unexpected expenses come up, you're prepared to just use your savings account and pay for them. Because if you don't, what happens is then you need to borrow. And a lot of times folks go to credit cards, which you end up paying way more than you initially borrowed. The suggested amount of this emergency fund is 6 to 9 months of your salary, which can be an overwhelming amount. One way to set that goal for that would be to maybe start with monthly goals of what is your monthly income. Then you get to that goal. So you feel like you accomplished something. Then you continue to grow to get to your 6 to 9 month savings. So this slide actually puts numbers to the concept just to give you an idea as you're deciding what you want your savings goal to be. So say, for instance, your annual goal is $35,000, your annual income is $35,000. 1% of that, $35,000, 1% of the weekly savings would be $6.73. I think no matter what your income is, we could all agree that we could find $6.73 to start with to put in a savings account. I know I'm a fan of Starbucks. For me, all I would have to do is not go to Starbucks for one day, take that $6.73 that I would spend on the coffee and put that into my savings account. Then you can see the comparisons if you want to continue to increase. 5% of that weekly savings would be $33.65, which is more aggressive. And then 10% is a lot and could be considered a lot for folks at $67.31. But this gives you the idea of the concept. Now we need money for later. Okay, so you have your money coming in, you have your emergency fund set up. Now you're planning for your future. Retirement comes before you know it, and you want to be prepared because you want to continue to live the life that you were living when you worked when you retire. So the first thing that you may come across when you're out in the real world and having a job is your employer may ask you if you want to participate in a 401k, a 203b, if you're working for a nonprofit, but a retirement savings account. If you are ever given that opportunity, please always say yes. It's free money. How that concept works is the employer will agree to match up to a certain percent of the money that you invest in this retirement savings account. So say, for instance, they match 50 cents on the dollar, you're contributing $5 every pay. So you get paid You put your $5 goes directly into your retirement savings plan. Now your employer is matching $2.50 of that because they're matching 50 cents on the dollar. So now you have $5, you have that additional $2.50. So now you're at $7.50 in addition to the interest, the compounded interest that you're earning on that account. So that's the free money that you get. In addition to that, there are other products that all financial institutions provide, which are called individual retirement accounts. There are pre-tax, post-tax, whatever your option would be. If you want to pay the tax up front, then as you spend the money, when you are using the account, then your tax is already paid. Or you may want to put your money away pre-tax, which saves you money on when you're filing your income tax as well. Those are some products that all financial institutions do have. Dollar Bank does have all of these products available at reasonable rates. So that may be something that if you're interested in, feel free to stop in one of our branches and talk to our branch manager about that opportunity as well. These accounts cannot be used before the age of 59 and a half. So keep that in mind. They're not your traditional savings account. They're retirement savings accounts. So again, this puts money to that concept as well. So let's use this scenario and compare these graphs. So your starting salary is $30,000. Your annual raise is 2%. Your employer's matching 50% up to 5%. Your retirement age is 65, and your average rate of return on this account is 5%. So if you start investing in a 401k at, say, the age of 20, you start at 20, you are going to, according to this graph, you contributed $100,000. That's the red bar. Then the blue bar shows what your employer matched. That would be $50,000 with that $100,000. So as you can see, your interest grows and compounds and you continue to gain money in this account. When you retire at 65, you're going to have $500,000 in that account. So that's where all that free money is. You actually contributed over the years, starting at $100,000, and you're walking away with $500,000 when you retire. Charles, I think I saw a question in there.
Yeah, one of the common questions over here is that, if these are my accounts, if these are my retirement accounts, can I borrow from them? Say if I wanted to buy a car or a house someday.
There are certain situations that you can borrow from these accounts. They're pretty much categorized as emergency spending. So for instance, as far as purchasing a home, if it would be some medical situation that you had, but there are times that you can borrow from it. I know as an employee, if I wanted to borrow from my employer 401k plan that I have, I would have that opportunity to do that, but with the promise and of course the contract that you will be paying this money back accordingly. So it is a loan that is to be paid back right away. If I would move on to a different employer, I would need to pay that loan up front before I left my job. I hope that helps.
Yeah, thank you.
And then just to give you one more comparison with this chart, that doesn't mean you have to start going through this process at 20. Say you didn't have those opportunities at that age and you're at a different age in your life. And say you want to start this 401k savings at 40. So according to this chart with these same scenario and statistics, you would then invest $25,000 from the time you're 40 till you retire at 65. Your employer then would match that. That's $25,000. Now your employer would contribute $17,500. When you retire after the age of 65, you're going to walk away with $125,000. So it doesn't matter what age you start, something is always better than nothing. And if you ever have the opportunity to invest in a 401k, please always say, yeah, this is evidence of your free money that you're getting by participating in that type of program.
Yeah, so
There's another comment
basically,
here.
oh, sorry, go ahead.
Oh, it just says, there's a question. To my understanding, most people retire with their 401k at 59 years old. Is that right?
Most people retire what? I'm sorry, it cut out.
With their 401k at 59 to 62. Is there, so I think she's asking about the age at which you can access those funds.
59 and a half. 59 and a half, you have to be the age of 59 and a half to access those accounts without any type of penalty.
Yeah, and I personally did borrow from my 401k for the closing costs for my house. So basically, you're taking a loan from yourself that you're going to pay back with pretty minimal interest. That is one of the 4 reasons that you can borrow from your 401k. If you take any money that you're not utilizing for those 4 reasons, which one is like an environmental strife, like basically similar to the wildfires in California, or if there's a medical thing for you or one of your dependents, I know that's one. There's 4 very specific reasons. You can have those conversations with the company that holds your retirement funds for you.
She has a follow-up here as well. Can you talk a little bit about the deduction that's taken out of those when you do access those funds? Does that estimate amount, is that included in your estimation there? So I think she's talking about the taxes and fees.
Yeah, it's pretty ridiculous. They'll take up to 1/3. So all this hard-earned money that you saved, whether you were 20 or if you started at 30, or even whenever you choose to start, whether it's a 401k, which would be matched by your employer, or an IRA, which would gain interest on a regular basis. Those are kind of the 2 differences, but you will get taxed a really, really decent amount. And I had this trouble. I went from one job to another, and I did not have a great HR team in place at the time, and they did not give me the correct paperwork. So I took a portion whenever I went to change my retirement funds from one 401k to another at another business. They sent me a check personally. I took it as income, and I ended up eating 1/3 of the total amount that was saved. So again, when I say get on the phone with the retirement individuals that work at the different locations, they can send you all the paperwork needed. You want to make sure that you have the correct forms and that the checks are made out properly so that you don't take it as income. They'll basically send it, if you were to switch jobs from one retirement firm to the other, they're going to send it on behalf of you into that new retirement company. Just make sure you ask all the right questions and don't make the same mistake I did. I guess I didn't ask all the right questions, but it's a decent amount. So you really don't want to touch that unless it's one of those 4 reasons, in which case there's a very specific process that you would utilize for that as well. As far as budgeting, you know, it all kind of ties together. We're saying, so here's the retirement that we were talking about. And Joan talked about the various pockets of money. So you want money for now, you want money for just in case. You need to be able to feed yourself, keep hopefully the heat on, especially in this weather, and a roof over your head. So let's make sure that we have the basics and the necessities. And once we figure that out and we have our emergency savings in case the pandemic starts again tomorrow, that we can survive for the next 6 months, ourselves and our loved ones. So cutting down on all these variable expenses, you know, maybe we don't need to shop so much so that we can put some money away. One of the biggest wastes of money that people spend is going out to eat. I'm a very big culprit of this. I like ordering and especially not leaving the house if you don't have to. This is a little bit outdated. You can't really find lunch for $8 anymore. So let's multiply that times 2. An average American probably spends closer to $4,000 on lunch and probably closer to $5,000 for dinner. And that's just the average American. So some people obviously more and some less. We teach a lot, especially through our first-time homebuyers program, the importance of kind of pulling money from thin air, figuring out where you can cut corners. We had a couple come through the program. The very first thing we have them do is write a written budget. And they were both smokers. They both smoked a pack a day. When you take 2 packs of cigarettes times 2 people times a week times 4 weeks in a month times 12 months in a year, and you see that amount. They came back the next time, they had patches on their arms, and they were able to buy their house. So that might be easier said than done for some people, but just to kind of put it into perspective. So lunch, dinner, you can't find a cup of coffee for 30 cents, but the main gist is figure out where you can cut corners. Go to Walmart and buy a big thing of Folgers and make your coffee every day if that's your thing. You know, once you figure out where you can cut those corners, paying off your credit cards and utility bills, that's part of the managing debt. You know, we talked about the personal loan. I was surprised to find out that Citizens doesn't have those, because we've been doing a lot of those since the pandemic, honestly, with, you know, my girlfriend as an example, $30,000 in credit card debt, and she was at 37, 39% interest rates. We got her to a 7.5%. So when you can really figure out how to lower those amounts, then you can take all of these savings and do exactly what budgeting is meant to do. Pay off your credit cards or put more money toward your credit cards. Take a vacation in this negative 10-degree weather. Obviously your emergency savings, so that's 6 to 9 months, and then increasing your 401k. So this is kind of a good snapshot of money for now, money for later, money for just in case, and money for long-term plans. This last bullet on here is kind of the name of the game. Increase your overall financial net worth. It's how are you going to be able to survive now, later, and then actually writing it down. If you haven't done a written budget in a while, Joan and I absolutely have some that you can look at and use, and then you want to just recalculate where you're at. If you've never spoken to someone about long-term retirements, we are happy to connect you with someone that can have any of those discussions with you, see what your overall plan looks like, maybe even help you do that budget, see where you're at, and then, you know, really just have someone to kind of help you. You know, like I said before, one of the biggest things that we are doing with all of this is ensuring that not only do we offer all of, oh my goodness, I apologize. I'm going to pull up every single other thing that we need except for what we need right now. So not only are we looking, you know, to teach everybody how we can do all these things, we want to put our money where our mouth is. So we keep saying free money, free money. Well, this is exactly what we're talking about. Anyone with any kind of income can qualify for up to $400 over the course of a year just by having a checking account with us. So that's a nice perk. Of course, there's a lot of fine print, and this is all of my information. Feel free to call, text, email me, and Joan, I'll ask you if you want to put your information in the chat. You know, this is our whole thing. No one at Dollar Bank makes commission. We are very dedicated to teaching this that maybe we weren't taught when we were younger. I mean, we learned that kind of the hard way during the pandemic. I don't remember taking a single class of any of this kind of stuff when I was in school, and I didn't go to school for finance, so I certainly didn't learn it in college. So here's some of the examples of the free money that we keep talking about. You can earn up to $400 over the course of a year. All these bullet points on the right-hand side of the page are more so kind of what I like to focus on. Switching banks is a hassle. Well, we have Click Switch. It's literally the switch of a button. All of your direct deposits, withdrawals are switched very quickly and very instantly, so you don't have to do all of it in your online banking. 2-day early pay, that's a really big one for us lately as well. So at Dollar Bank, for instance, we get paid on the 14th and 29th. With early pay now, we get the 12th and the 27th. If those days fall on a weekend or holiday, you get it even sooner. As far as Zelle, I was glad to hear Citizens bringing that up. I personally am very dedicated to encouraging people to stop using Cash App. There are a ton of identity theft issues. There's a ton of issues where the bank doesn't take ownership and the Cash App people don't take ownership, and the money is just in an abyss and people go through a lot of issues. So most banks are utilizing Zelle. I encourage you, if you're not already signed up, you can typically sign up for it in your online banking. We never charge you for an ATM fee. There's probably 60,000 at this point, free ATMs. We're everywhere. Target, Walgreens, my local Rite Aid, a dive bar. You can find us all over the place. This is a big one here, this 1/4% discount. When we talk about managing debts and lowering your, the debts that you have out there, this example I keep using with my one girlfriend, 1/4% discount can go a long way. With that personal rate, I told you we got her down to a 7.5. I think it would have been higher than that if she didn't have the checking account. So you can get discounts as well. If you are a homeowner, you're looking to do a refinance, we waive all your closing costs. That's a huge one. I mean, that can be $2,000, $3,000 sometimes just to do a refinance. So we open a lot of checking accounts for people so they can take advantage of that. And again, Dollar Bank historically has been known for a residential mortgage bank. So, when I bought my house 8 years ago, I shopped around. We just have some of the lower interest rates. So if you have a mortgage elsewhere and you're looking to refinance, it's always worth a conversation. Interest rates are kind of all over the board since the pandemic, but it's worth a conversation. And I know that Citizens mentioned, and I know that they do have a good first-time homebuyers program. So do we. It's worth finding out the ins and the outs. You open a checking account with us, you get this 400, then you get this 500, and then we have a match program. So you save 1,000, we match up to 5 in order for you to get the house of your dreams. So that's kind of our everything in a nutshell. I wanted to definitely stay on track as far as the time that we were allotted. I think everyone's been asking questions as we go, and
Yeah, good stuff. You've covered
yeah.
them all. So thank you very much. We greatly appreciate it. Well, let's leave with this then before we transition. And what's your best piece of advice then for folks, as they're thinking about planning and managing? What's the one single thing you want folks to take away from today's conversation?
I'll give mine, and then I'm actually curious of Jones as well. I did not come from this background, so I started with Dollar Bank, and I said, I don't quite know exactly what you guys are doing. They said, we can teach you that if you can manage people. So I learned a lot very quickly, and in never having asked those questions, or quite honestly working for a bank, I never thought to do anything differently than the way I was doing it. And then I started learning that there's better products out there, and I've started making money on it. And I was like, oh, well, this is like a no-brainer. So without kind of the path that my career took, quite honestly, but I would have never thought to ask. So it's worth it just to sit down and have a conversation with anyone just to find out like what your options are. I brought up my girlfriend as an example, but it took her forever to do this. And I'm like, I don't make commission, and I'm your friend, so you should trust me. And I teach this for a living. So, what's the hesitation? And then after she did it, she's like, oh, well, I should have done this a long time ago. So I encourage everyone, start with the conversation at the absolute least.
Joan, you had a comment?
Yes, actually, my thought with the whole process is the whole financial literacy concept. That seems to be the big tag word all around, and I feel it's just so important because you don't learn it in school. I know for me, my parents, speaking of their financial situation, was always taboo back in the day. So it wasn't that it was something that you learned from your parents as well. So anytime that you have the opportunity to get any type of financial literacy information, please take advantage of that opportunity and apply it accordingly to your own situation, because the sooner you get started with good financial practice, the better off you're going to be as your life goes on.
Excellent. Well, thank you both for your words of wisdom. Thank you for your time and coming back here and just your dedication to the community and sharing information. We appreciate y'all so much. And we look forward to connecting with you again throughout the year. So thank you so much for everything you've presented today.
Yeah, of course. And you can feel free to share everything that I've shared with you. It has my contact information on it. And, if anyone had any questions, we can have offline conversation, and we're here to help.
Excellent. All right. Well, thank you so much. Y'all take care.
All right. Thanks so much. Bye-bye.
And then, so now we'll transition to the final part of our day, which is really just around the home buying process, right? Around building wealth. And for many families, wealth really does involve not just your savings account, it's more than just your paycheck. It's building security where our money can start to work for us instead of spending so much time working for our money. And property home ownership is still one of the traditional ways in which you can build wealth. Is still relatively safe. So with that, we're pleased to welcome our own housing counselor, Mr. Jonathan Weaver. And the floor is yours, Mr. Weaver. Thanks so much for joining us today. We appreciate you.
Thank you, Charles. Thanks for everyone for being here. I just applaud people who want to learn, set aside some time for sharpening their tools, sharpening their skills, and hopefully there's something to be taken away for each and every one of you. I work with Charles and his team, and I'm just impressed by what they do every single year, every single week to help their clients and hope to be half as effective as they are. I am the housing counselor here at the Mon Valley Initiative. My background is in banking. I was in mortgage origination for years. I've done some mortgage closing work. I've done some telephone work for a company that was based in Santa Fe, New Mexico, and just a huge background in residential home lending. So the question is, what is it? And this may not be for you. You may not be at a point yet where you're ready for this, but maybe you have family, friends, people you work with, people you go to church with that maybe you can share this information. And as you're sharing it, what's great is that you're also absorbing some of that information for your own benefit. So learn and share, I think, is the best way to grow your base of knowledge in all these different banking, financial, retirement kind of skills. But so what do? I'm a one-man operation. I'm one person. I answer my phone, I do my data entry, I meet with my clients. I get to do this all on my own. But I'm looking for people that want to learn about home ownership. How is that path of home ownership for them? And my philosophy is, I want to talk to you directly. I don't want to talk to you in a group setting. I don't want to talk to you in a Saturday afternoon meeting. I want to talk with you one-on-one. I think to some degree we're all selfish. We want to learn about ourselves, and that's exactly what I want to bring to the table. And through that, we're looking at credit scores. We're looking at credit reports. I pull credit right from Credco, and it's a mortgage lender's pool. It's a triple pool. The great thing about when I pull people's credit is it doesn't affect your credit score. Here at Mon Valley Initiative, we don't have the ability to lend you money. We're not a bank. We're not a finance company. We do it for educational purposes, and so it doesn't affect your credit score. The sideline to that is that the score that I'm getting is probably as close as you're going to get to a bank lender's mortgage credit score. And for people out there, not all credit reports are the same. The credit report they pull for you to get a credit card is not the same as the credit score they pull to get you an automobile loan. And a mortgage loan is even different from the one they do for a car loan. So we look at credit, we look at in depth, and we just start working from there on what's there, what's good, what can we work with that's good, what do we need to focus on, maybe that needs to be cleaned up. And in some cases, there oftentimes we're talking about what we need to strengthen and build upon. Credit, in my experience, my 11 years here with Mon Valley Initiative, credit's always the first obstacle. Credit's they're going to be the one that's going to be first and foremost for most people when they're looking to explore that home ownership path. Secondly, we're going to look at what's it cost to buy a home, and buying a home is very expensive. Here in Pennsylvania, we've got some of the highest closing costs in the country, but we're going to talk about that, what to prepare for as you're looking to purchase a home. Everyone's a little bit different, different areas. City of Pittsburgh, our transfer tax in the city of Pittsburgh is much higher than outlying areas. So how to prepare for that, how to save for that. We're going to talk about strategies of how to get through the process. My vision for my clients is that we're strong. We know our credit's strong. We know our employment's good. We know that our expenditures meet our outflow, and we have education to kind of give us some strength through that process. And then lastly, just looking down the field to what it looks like long-term to be a homeowner, planning for the unexpected, picturing what can happen and picturing what we're going to do if we're faced with certain situations. So that's kind of what I get to do. And everyone's different. That there's no time. You know, people say, how long does this take? Well, it's different. It's different for everybody. Everyone's in a different place, different debt load, different income, different challenges. So there's not one answer for that. Clearly, in my mind, the more money you make, the less time it takes. You know, so if you have money, then we can do things fairly quickly. And if you're not blessed with a lot of income, then it's going to take usually some more time. Why buy a home? You know, and I want to examine with everybody when we meet. Well, why do you want to do this? I mean, what's the drive? You know, is it strictly building assets? Is it stability? You know, is it able to have a cat or a dog or be able to paint the rooms the way you want to do it? You know, that independence, that taking control of your living place. For some people, it's status. They want to live in the right neighborhood. Sometimes people are looking for other non-traditional ways of income. So maybe a duplex or triplex or a 4-unit might be something that they're interested in. And then lastly, you know, someone told you it was a good thing to do, and that's probably pretty weak, right? You don't want to do it because someone else told you to do it. You want to have some reasons on your own on why that works. The number one answer I get when I ask people, of course, is they want to do it for their family. They want to leave something. They want to leave a legacy for their family. And this is the way that most people envision being able to do that. And I think that's probably the best answer, trying to leave something behind to make a mark on this world. So a lender, you know, we always want to, my approach has always been, you know, let's look at it from a lender's perspective. That's kind of the background I bring. If we know the questions that a bank or mortgage company, a credit union is going to ask, if we know the questions they're going to ask, then we can prepare for the test, right? We can get ourselves positioned to be ready to ace that test. So, you know, the first thing that any lender is going to look at is how long have you been on your job? How are you paid? Is there changes or gaps, and why? Full-time, part-time, so they're just trying to establish what's the monthly income. And all these things are workable. It's just some of them bring different rules or different documents that we need to do that. So, and you can see from a banker's perspective, they want to see stability. You know, if there's been changes, they want to know why, and do those changes make sense? You know, if you had a gap and then you were able to get a better paying job that was closer to your home, that offered more benefits, that clearly makes sense to people. If there's a gap in a job and you took a lower paying position with less benefits, that's going to be a little tougher to address. But knowing that they're going to ask those questions, then we can prepare, and we can be prepared up front and not be caught by surprise when they ask some of these questions. Second part of that any banker is going to ask you is, you know, can you afford it? You know, the capacity. Do you have the capacity to afford what you want to buy? So what's your income? What's your debt? And what's the expected home mortgage payment per month? Two of the ratios that are pretty common are 29-41. So about a third of your gross monthly income. Mortgage information is calculated on gross. So before taxes, before 401k, before those things, you know, your gross income, a third of your income for your mortgage payment, and about 41% for your new mortgage plus debts that you may already have. We are seeing in some cases that they are able to stretch that, stretch to sometimes higher depending on certain circumstances. So we'll delve into that a little bit. What's your credit? So what's a credit score? Huge part of mortgage underwriting is what your credit score is. People clearly with better credit have more flexibility than people with lower credit. So 620 is kind of where we start. As you know, there's 3 credit reporting agencies. There's TransUnion, Experian, and Equifax. And in the mortgage world, we take the middle of the 3. So we throw out your best, we throw out your worst, and we'll use your middle. So usually 620 is where we start. I want to counsel people, you know, to get up to 660, 680, because that's when we begin to see some additional support, additional help in the form of cash become available for people. We want to see, I think, typically 3 to 4 accounts. So we want to have a base of credit. We want to have not just one credit card, we want to have a base of different things. A credit that's open, so closed accounts no longer matter, and more than a year old. So we want to see a track record over a period of time that you're able to manage and budget and maintain those good on-time payments for about 12 months. Building credit, making credit stronger. To me, it's usually, I think of it quite simply as a two-step process. We've got to get out the old, the bad, the collections that might be out there, and we want to add in some new positive accounts. So sometimes we need to open new credit to establish a broader base, to put some good things in there, and we also need to address some of the things that might be in there that we need to take out. Collections, the delinquency, slow pay. We need to figure out how to move those along. And time will heal all those things. Time will, over 6, 8, 12 months, time will help clear those things out and make them less and less impactful. So we definitely would talk about that. I go off at the side roads too. I want to talk not just about mortgages. I want to talk about overall financial fitness, right? And looking at, an $18,000 car for two people, one person at 3% and another person at 20%, the difference that means to those people is pretty significant. So good credit allows you, the consumer, to get more favorable financing. Huge difference between the two, where a better credit person might pay $1,400 in interest to a bank over 5 years, and someone with less perfect credit might share $10,000 in interest to a bank. So that's pretty substantial. And the way I'm work that in is, if you're looking to buy a home, that $8,000 or $9,000 difference would really make a difference in having closing costs or having money or having savings prepared. So that's why, to me, part credit is so important to, not just home ownership, but life overall. I talk a little bit about, again, for financial wellness, the biggest car dealer lie is that, buy the car now and then refinance it in a year. Well, that doesn't always happen. Usually if you're getting a higher interest rate, your credit's not in the best place. People with good credit don't have to accept bad deals. They can walk out of the dealership and go somewhere else. You might be able to get a different model and a different color at a different dealership when you have good credit. When you have poor credit, then you don't have the ability to walk out. I have a love-hate with JD Byrider. I love that people can buy a car and not do laundry off the bus, and they can grocery shop with a car. I love that. But I know that they're sacrificing in the terms that they're taking. Refinancing doesn't usually work out for people in a car. A car's a depreciating asset. What it's worth this year is going to be less next year. So oftentimes it's hard to get a bank to agree to refinance it, because at higher interest rates, you're not making much dent on how much you owe. And the value of the car is going down. So when you're on a car dealer lot and the dealer says, well, just buy it and then refinance it in a year, remember in the back of your mind that this sometimes is not a great strategy. Credit score comes into effect largely in car insurance. So, this has nothing to do with home ownership, but it has everything to do with home ownership. People with poor credit tend to make more claims than people with good credit. So the insurance companies price for that. The lower your credit score, the more they're going to charge you, and it can be pretty significant. And to some degree, in this article I have here, it says that maybe even more, poor credit might be more damaging than having DWIs or having prior, driving while intoxicated activity on your report. So couple the two together, the extra $9,000 you pay on interest and the extra $7,000 a year that you pay on insurance, that's $16,000 over the course of 5 years. That's a lot of money, and that's money that could propel you into being your own homeowner. So, it all kind of starts with understanding credit, getting some answers about that, having a strategy in place on how to improve that, and then using that strategy to help springboard you towards having savings that you're going to use to work towards home ownership. Cash, so as I mentioned, it's expensive here in southwestern Pennsylvania to buy a home. And how much will it cost? And I tell people roughly about 10% of the sales price. So if you're buying a $150,000 car or home, I beg your pardon, I think the question on the table is $15,000. Where is $15,000 going to come from? And the great news is that it doesn't all have to come from you. It can come from some different sources. The seller can help. There's some rules that we'll find out that the seller can participate in helping you buy a home. There are grants available. I mentioned good credit opens up some funding, and that works. You can get a gift. If you have an aunt or a grandma that wants to see you buy a home, you can get a gift for that. You can get a loan against an asset. So I think the ladies at Dollar Bank were talking about you can borrow money from your 401k. Yeah, that's probably one of the only reasons I would say you should borrow against your 401k. But you can use your 401k as a springboard into home ownership, and you can sell an asset. So maybe you have a snowmobile or a car, stocks, bonds, baseball cards. You can sell an asset to purchase a home. So keep that in mind. Some people say, well, why would a seller assist you in buying a home? And it's very simple. If I want to sell my home, the base that in my mind is I want to sell the home. And if a realtor can bring me someone that can afford my home, can pass the credit exam, has enough cash, but just needs a little help from me, then I would consider participating in that. I would rather, put a little money into it to help me get out of my home and move on to whatever's next for me. Most lenders are going to want to see it 2 months. They want to verify that you have these funds. And they're going to want to see that by 2 months bank statements. They're looking for large deposits. There's some risk involved when you buy a home. People that have saved for that occasion, people that have put money aside diligently and strategically, that's reducing the risk. I often say, the bicycle that you saved your money for to buy versus a bicycle that was gifted to someone. I think the person that saved the money to buy that bicycle themselves is going to take care of that bicycle better. They have something in the game. Same thing with home ownership. If you have nothing in the deal, it's much easier to pull out when things go bad. That gift, that's a little different. You can get 100% gift. You don't have to have $1 in your account, but if your grandma wants to give you all the money to buy a home, that works. And the tie there is that if grandma gives you $15,000 to buy a home and you run into trouble, you're not going to want to lose that home because you're going to have to see grandma every Thanksgiving and Christmas for the next foreseeable future. So your tie to that money is emotional, that you don't want grandma to see you fail. So you will fight like cats and dogs to stay in that home if things would get tough. Upfront costs. So what's it take? When you're signing a sales agreement, this is kind of where we're at. What's it take? It takes some money to get this going. Is my point to people. You may not need any money, but we need money to get this started. So when you sign a sales agreement, your realtor, if there's a realtor involved, they're going to want some money up front. We call it hand money, good faith money, deposit money, a bunch of different names. And it's usually going to be $1,000 to $2,000 that they're going to want for you to give. That's basically telling the seller that good faith, you have some money at risk, and you want them to take the home off the market so no one else can buy it. There's a home inspection option. You don't have to get a home inspection to buy a home. I can't imagine that you wouldn't get a home inspection, but it's about $700 these days. It's really gone up here in the past few years, and that's you contracting someone that you pay. I'd love for you to be there at that time. And they're going to give a report on some of the deficiencies of the home. I think all homes have problems. Some are things that you would look forward to repairing. Some are things that maybe are larger in scale. Foundation problems, roof structures, inferior or non-sufficient HVAC. Those are some big ticket items. And and that home inspector is going to alarm you or maybe give you a little insight on what the condition of the property is. Once you spend that money, you're not getting that money back. You know, that guy's done his job. He sent a report. The home may be, he may advise that this probably isn't the one. You're not getting that $700 back. So you've got to keep that in mind. Usually once we've worked through the inspection part, then you're going to okay the bank or lender to do your appraisal, and that's about $700 as well. The appraisal is not yours. It's not done for you. It is done for the bank. It's the property of the bank, but you should be able to get a copy of that. But it is done for the bank, and it is something that they go ahead and order. You know, there's some back end costs of owning a home. You know, once you buy the home, it's not over. You got to move. You got a moving van or professionals. You got to have food. I mean, the Army marches on its stomach, so having pizza and beer and pop and stuff are things that you need to anticipate. Getting those utilities turned on, sometimes that requires some money. So you need to have some savings in place for that. You know, there's immediate updates that you're going to want to do: the paint, the rugs, the shelves that you want to put in. Those things add up. You know, can of paint can run, you know, $30, $40, $50 for a can of paint, and it can be alarming. And having a cash reserve, so having something to fall back on, even though you had a home inspection. I promise you, something's going to go wrong in the first year of home ownership. It'll, you know, you can do all the inspections you want, but something's going to come up, and you need to be fiscally prepared to take those things on and have a plan to do that. You know, the car, tires for the car, or a major unexpected repair for the car. You need to have those things, have some cash available. We do a crazy thing to people. You have money, you buy a house, we take all your money and put this loan over top of your head. So it's good to have some money in case life happens to you. The last thing a lender's looking for is collateral. You know, what is the home you're buying worth? And we find that out through the appraisal. There's really not much you can do about that. We don't play a role in that other than to anticipate that coming in. So, so it's the credit, the cash, capacity, you know, can you afford it, and the collateral. Those are the four big pieces that I think any lender on the surface is going to be looking at. A couple different loans we talk about. So when we talk about different loans, I liken them to tools. You know, like the carpenter has tools, the mortgage lender has tools. Not every tool is perfect for everybody, and not every tool is perfect for every job. You know, a hammer, it's used for pounding nails. You can't use it to saw wood. So different tools for different situations. So running through a couple real quick, you know, FHA loans, very common to hear. You know, 620 credit score is usually where we see that start. Some of the subtle benefits, 100% gift, I think I mentioned that. Kitty condos, so you can buy if your kid's going to college and you want to buy them a condo that you don't want to live in, you can do that. It allows for a cosigner, so it does allow for a cosigner, and it does allow the seller to participate with up to 6% towards your closing costs. So when we talk about 10% being the big number, you know, the seller in an FHA loan can bring most of that, you know, 60% of that to help towards your closing costs. MIP, which is mortgage insurance premium. This is a monthly fee that you pay in your mortgage. Protects the lender, doesn't protect you, and it never goes away on an FHA loan. And there is a caveat that credit scores on FHA can be as low as 580. Actually, there's probably not even a number associated with requirement on credit score, but the thing that comes with it is extenuating circumstances are usually money. So if you have sizable assets, if you've got a 401k that's $100,000, if you've got CDs or extra savings, you know, having lower credit, it may not stop you. Having more down payment on an FHA loan may help contribute to that. So even though your credit score might not be great, if you have assets, if you have larger down payment, it might be a way to make that transaction work. VA loans only for veterans. Here in southwestern Pennsylvania, we have a large VA population, probably some of the highest numbers percentage-wise across the country. If you're not a veteran, then this doesn't work for you. But maybe you have a friend who's a veteran, and if you do, just remind them that this is probably the easiest and best way for them to buy a home. They can do 100% financing. The seller can pay all the closing costs. The rules are relaxed, and usually they'll side with the veteran if there's ever a kind of a coin toss situation. So if you're not a veteran, or you know a veteran, just ask them and remind them that this is one of the best benefits of being a veteran. USDA loans, so rural, we used to call it rural housing. I'm glad they changed it to USDA because it's hard to say rural housing, but these are for more rural areas, more spread out, more farm-like. So when I think of the Mon Valley here, I think Elizabeth, PA, and outward. So out to Monongahela, Charleroi, Rostraver, out in those areas, we begin to see rural areas. USDA loans be able to become available. You can do 100% financing. You can finance closing costs. It's a fantastic type of loan. Credit score is a little bit lower at 640, and less than that, you can try manual underwrite. So that's maybe some flexibility there. Most loans are underwritten by a computer. Most loan requests go through a Fannie, Freddie, what we call DU or LP, where someone just inputs that data as far as income and debt, credit score, assets, and then the computer just figures out whether or not this works. So manual underwriting, a person at the other end, usually isn't what you're going to see. So I kind of love hate, that computer underwriting. I mean, computer doesn't see skin color, computer doesn't see sex, so some of that discrimination stuff is weeded out by a computer doing it, but a computer is not a person. It doesn't have feelings, and maybe doesn't see some of the nuances in someone's life that may be out there. But USDA loans, from time to time, you can do a manual underwriting. Conventional loan, which is the largest type of loan in the United States, conventional loans, usually for better credit, so 640 and plus. PMI can go away. Private mortgage insurance on a conventional loan can go away over time. There's 3% down options, and seller assistance is usually going to be limited to about 3%. So compare that to the FHA is 6%. So conventional loan, the seller's participation is going to be just a little bit less. So they're typically, going to require a little more money when you're in a conventional loan, but usually the stereotype is that a conventional loan person maybe has already owned a home, or they're looking at conventional because they want to do a bit larger down payment. So seller assist usually isn't the thought that we have. So those are kind of things that I go through with my clients. We lay out some strategies or mapping ways to reach our goal, and and my thought for the year is, small intentional steps, every day, every week, every month, add up over the course of time. So, I do believe in cutting out coffees. I do believe, unfortunately, I'm a little bit militant when I do believe in cutting out those things. I believe in cutting out Netflix. I believe in cutting out bank fees. I can't tell you the number of clients where we're looking at their bank statement and they're accessing money from an ATM machine, and they're getting charged two ways. They're getting charged by their own bank, and they're also being charged by the ATM machine. So, they're getting a $3.75 charge from their bank for not using a machine in their coverage, and they're also getting a fee from the machine itself. So, and these can add up, and it's just not coffee. It's all these different things that we have fallen into. And I said I'm a little bit militant. I'm going back to cash. I think cash is the way. If you want to budget, if you want to work towards a goal, I think cash is a good way to do that. I think looking at daily expenditures, which is crazy, right? No one wants to. You've got to look at what you spend every single day, and write it down. I do believe, I echo what Andrea says, write things down by hand. People have said, well, what about these apps, Mint and budget apps? as much as I like them, they're easy. I don't think they register with the human body the same way that writing stuff down. So looking at everyday expenditures every single day, what did I spend? Can I do better? Did I do great? You know, being able to look at that and doing that over and over, period, every day, little by little, begins to sink in. Spending is a habit, and spending feels good from time to time. You know, they talk about retail therapy. You know, spending money feels good for some reason to us. Well, saving money can be as satisfying. You know, if you've never had $500 in savings, you know, when you get it and look back and say, I've never had this. You know, I want to get $600. I want to get 700. I want to get 1,000. You know, it can be as addictive as spending money. Looking for those opportunities, not using TurboTax, not using services that you have to pay for, not opting for that quick refund on your tax. Wait the week or two that it takes for you to get a deposit. You know, don't spend money for those things when it will come to you soon enough. So looking for those small opportunities that it takes. And people say, you know, buying a home's hard. This is the hard part. This is the hard part, is telling your friends you can't go out for drinks on Friday night because you want to be a homeowner. Is telling family, no, I'm not going to go on the vacation to the Bahamas because you want to be a homeowner. You know, that's the hard part of home ownership is accumulating that savings and money and balancing your debt load so that it's all possible. So, but it's all doable. And you know, I'm torn. You know, sometimes they say, tell people what your goals are, and sometimes I hear, don't tell people what your goals are. You know, if you tell people, then in your head it feels like you already accomplished it, and you haven't. So I'm still kind of torn on that one. You can reach me pretty easily. It's, you know, email is probably the most common way. It's jweaver@monvalleyyinitiative.com. Or you can call me through the main office, and my extension is 4008. If you happen to be working with someone on our workforce team, you know, they'll be happy to share my information with you. We can meet in person. We can do it online, over the phone. I don't do Zoom meetings. I do phone meetings. But you know, different ways to provide service. So I don't know if I see any questions here, Dr. Howell, but
I'm just checking the chat here. I don't see any questions here, but if you do have questions, please feel free to unmute. Thank you. You know, again, thank you so much for covering such important information today. What's the one pitfall you just warn folks to really be mindful of, you know, when it comes to getting started towards their goal, whatever that might be?
don't trust anybody. I hate to say that. You know, everyone has a focus, right? Everyone has a perspective. Do your due diligence. Drive to the home you want to buy in the morning and commute to work. See what it looks like. Drive home at night. Drive there on the weekends. Drive there in the morning. You know, referrals are a great source for lenders, realtors, home inspectors, insurance agents. You know, everyone wants to get theirs, and I'm okay that someone makes money. You know, when I buy a car, I know the guy's going to make money. I just don't want to be his whole month. So being mindful of that. Asking around, asking different people what their experiences are. You know, it's learning. It's learning as much as you can because the system's stacked against you. Everybody in the process knows more than you if you're a first-time home buyer. You know, the seller has made mortgage payments. The seller knows what a tax change looks like. The seller knows what an annual escrow analysis looks like. You don't. You know, the realtor has looked at houses before. The realtor has signed sales agreements before. You haven't. So learning as much as you can, and you'll never know as much as everybody else. But you know, we want to make sure that you know a little more than you do now. So learning and sponging and trying to do your due diligence. I tell my clients, don't trust me, double check what I'm saying. And then that way it becomes something right? It's not something you think or something you're told, but it was something that and you now own it. And that's power, right? Having knowledge is power. In every aspect, whether you're looking for an employer, whether you're looking for a girlfriend, whether you're looking for a bank or a mortgage, having knowledge strengthens your position. So learn as much as you can.
Thanks for that. I see Tamisha, you have a question. Go ahead.
Yes, can you hear me?
Yep.
Yeah.
Okay, so thank you, Mr. John, for all your information. So my question is about the homeowners portion that you were speaking about. Whenever it pertains to home owning and picking insurance for home ownership, if I was to come to you as my homeowner advisor and to learn more about buying a home with you, do you suggest a insurance company or are you able to refer me to a home insurance broker?
I don't know that I would refer you to someone. I think, my style would be, who do you use now? Do you have car insurance? Are you happy with that person? That's always, it's like when someone says, who should I go for the home loan? Well, start with your bank. That's usually a good starting point. So if you have homeowners, if you have renters insurance, always a good place to start is with whoever you're doing business with now. An insurance broker, I think is a good place to start. You know, when you go to State Farm and ask them for insurance, what kind of insurance are you going to get? You get State Farm insurance. You're in their building, they're going to sell you what they have. An insurance broker offers 20 different companies. Maybe they're not big names. Maybe they're the Conestogas and the Infinity and the enterprise insurance companies that maybe you're not familiar with, but might be still very good insurance companies. And that's kind of what the mortgage broker and the insurance broker have in common, is that they have a variety of different lenders that offer different options and trying to determine which one of those might be best for you. Homeowners insurance has really escalated in the past few years, and I think we're going to continue to see that trend going forward. I know you can't really touch a policy any longer for under $1,200 a year to get started. And these drones, they're doing examinations of roofs, and roofs are sometimes a reason why they won't give you a policy. And they can get pictures like they've never been able to get pictures before. So I don't know that I'd advise you to go somewhere, but I'd want to talk with you, talk out, what would be good places for you to go. Friends, family, do you have friends and family? Do they own homes? Are they happy with their insurance company? Let's talk to those people as well. I don't want you to get cheap insurance. I don't think cheap insurance. I want you to get good insurance that's going to provide protection in the event you need to place a claim. I mean, look at these people in California and North Carolina. Cheap insurance is not always good insurance. So I want to make sure that you've done some due diligence or done some investigating on can I afford it? Is it a good price? But is it also a good policy that I can count on? So I hope that
I
answers your
just have
question.
two more questions for you, Mr. John.
Yeah.
So whenever it pertains to that furthering about insurance, will you be able to provide information about minors insurance or the insurance for the land around the home and up under the home, especially since Pittsburgh is a mining city and somebody can definitely buy a home on top of a mine or where there can be a landslide. So are you able to provide that type of information?
Sure. There are maps available on the internet today that you can search and see if there's a mine under your home.
Really?
Yeah.
Do you have a link for that, or just look it up? I could Google it.
Mines and subsidence. I think if you just Googled that, if you did mine subsidence maps, you can kind of see. Now, large part of West, I mean, for most of us, yeah, there's probably a mine under there. And then mine subsidence insurance is available through the state. So we don't, I don't, I think an insurance broker can sell it to you, but really it's coming right from the state. So if you want mine subsidence insurance, you can get it direct through the State Department of Insurance, I believe.
Right, because there's so many different types of insurance policies, and a lot of people get stuck with that. And just one last question. I swear I won't ask you anything else, Mr. Joy, unless I see you
Wait,
face
thank
to face. Okay, so whenever pertaining again to buying a home, um, there are people that have a life insurance policy where they're able to borrow money in order to place towards a home. Whenever doing that, would that be considered to be a cash payment and be taken with that 10%? Or would that be taken as what?
Well, you get both, right? So
Okay.
if you borrow against anything, whether it's a life insurance policy or your 401k, yes, you're introducing the cash into the deal, which is perfectly fine.
Mm-hmm.
But you're also going to introduce a payment. So the lender needs to be aware of what that payment's going to be. So, you know, if you borrow against your 401k or insurance, there's going to be a monthly payment. And I realize you're paying it to yourself. I get it. But a lender is going to want to count that as one of your debts. So you have to be strategic in how you want to repay that. Obviously, I want you to pay it as fast as possible. But the downside of that is that your payment's going to be higher. So we need to be strategic in how we do that. Just because you're borrowing your own money from a 401k or insurance, the lender is still going to count that as an obligation. You can't you can't choose not to pay it. You have to pay it, even though you're paying it back to yourself. So yes, I think cash value of life insurance, you can do that. If you borrow against it, I think they'd want to count that payment. But yeah, that should go towards your cash into the deal.
Thank you so much.
No problem. You know, and so many people right now, tax refund season's here upon us. You know, that's part of why the spring market gets to be so heated, is because that tax refund in some cases can be the springboard to put you into home ownership. You know, with that money plus you know, some seller assist plus some programs that are out there, can kind of do it pretty much all in. Our state has a program, PHFA, Pennsylvania Housing Finance Agency. It's our state agency. Most states have an agency whose mission is to home ownership. So we deal here at Mon Valley Initiative, we deal with PHFA on a couple levels. They help us sometimes with financing and helping us with the building of the apartments that we have. And sometimes they help people with senior living. We don't do senior living, but sometimes they help with senior living center. And they also help people with home ownership, so single family homes. And they have a program for people who have better credit scores, so 660 range, where they will lend you 5% of the purchase price that you can use towards closing costs. And as long as you stay in the home for 10 years, you don't have to pay it back. There's not a monthly repayment on that program. So, but it does require, as I mentioned, you know, a little bit better credit scores. But when we talk about 10% to get you in the deal, they may be able to bring half of it. And I'm all for you using their money, the seller's money, and leaving your money in the bank in case something would happen down the road. So again, that's part of the strategies that we talk about as we're working towards you know, this journey of trying to be a homeowner.
Awesome. Well, thank you so much for your time today, Jonathan. We appreciate it. Again, if anybody has any questions or follow-up, Jonathan's been kind enough to leave his contact information there. But with that, we're just going to turn to close. Thank you again so much for your time today, Mr. Weaver. Greatly appreciate it. I just want to share a couple public service announcements before we close. First of all, for anybody that was intending on attending the public hearing for changes to the PRT bus routes, that will not be in our office this evening. That will now be on Zoom. So if you need the link for that, please make sure to follow up with me or one of your coaches to get the link for that. And then secondly, if you or anybody that you know is in need of employment or financial coaching, give us a call here at MVI. Our services are free. Our only goal is to help you get where you're trying to go. So please feel free to make referrals, send your friends to us so that we can help them get ahead as well. And then finally, please take all of this stuff under advisement. You know, to get where you want to go starts with taking the step today. And you know, as we've said over and over again these last few weeks, man, there are plenty of opportunities to invest in yourself. And that's when you take charge of your financial future, that is literally what you're doing. You are investing in yourself and in your household. So please, again, you know, take this stuff under advisement, take the next step, follow up with your coach, follow up with a financial advisor, but ask the questions that will allow you to get where you're trying to go. But finally, I want to thank everybody for their time today. We sincerely appreciate it. And we look forward to connecting with you and working with you as we go forward. Thank you, everybody. Have a great day. And again, we look forward to connecting with you soon. Take good care.